Welcome to the part of the show where I discuss what I believe is important for individual investors to understand or consider over the next 5 to 10 business days before they make their investment decisions. I'm going to touch a bit upon inflation and inflation data. I'm also going to talk about the Fed. What are they saying? The Federal Reserve in the United States, they are the be all and end all for interest rates around the world. Everybody looks to the Fed to set monetary policy, to set the interest rates for the United States, which all the other countries feed off of and compare their rates to. The Federal Reserve actually at 2 p.m. this afternoon is going to be coming out with their minutes. And in those minutes, they're going to talk, or we'll see what the Federal Reserve or the Board of Governors were speaking about at their last meeting when they raised interest rates 75 basis points. So I think looking at the Fed and inflation is important. We're also going to talk about how many bargains are still out there today for individual investors to consider. Once upon a time, there were quite a few. Today, maybe not as many. And lastly, price of oil. I think individual investors still need to have one eye on the markets and one eye on the price of oil, because the price of oil, as we're learning, is so crucial to inflation, interest rates, and the overall markets in general. So let's start talking about the inflationary data that we've seen recently. As many of you may know, recently we've actually we saw a tick down in inflation. Inflation in the United States was over 9%. Now it's somewhere around 8.5%. In Canada, over 8%. Now it's somewhere around 7.5%. And that really gave a jolt or some adrenaline to the stock market when those readings or data came out, and the market really started to move higher. If we begin to see that this was just a one-shot deal, that this was just 1 month data, we all know that 1 month does not make a trend. So if the next time we see inflationary data come out and it's back up again, I think this will be a very big negative for the stock market. I think a lot of people are looking at inflationary data starting to continue to trickle down towards that 3-4% range at some point over the next year or so. I personally think it's going to take a little while before we see inflation hit the target of the Fed, which is 2%. It may take a few years, as we know that wage inflation is very sticky. We're seeing higher wages out there. We're seeing price of food, price of groceries, really the price of rent, cars, everything has been going up. And I think it's going to take a while before we see that inflationary data take lower or significantly lower. But I think we need to keep an eye on the Fed, the Bank of Canada. I know the Bank of Canada recently said that they're going to have to continue to attack inflation with higher rates going forward. And if they continue to say that, the Bank of Canada and the Federal Reserve continue to raise rates, what does this mean for the overall economy? Unfortunately, I think the economy will continue to be volatile in this type of environment. Secondly, I want to talk about bargains. Do we still see bargains in the market? And when you make your individual investment decisions, what are the bargains out there? Well, I think about maybe 6 weeks ago, you probably could have closed your eyes and pick a sector, and there would have been probably at least half a dozen to a dozen stocks on sale. And I think a lot has changed in the last 6 weeks. We've seen the NASDAQ rebound significantly. So there aren't as many bargains as there were before. To me, all that means is you got to do your homework. You really have to analyze these businesses and to see if you're going to look at buying their shares or their stock. And it's not as simple as, well, figure out what's fallen the most and then buy that stock. Doesn't always work that way. There have been a number of stocks that have fallen in value that haven't come back up as yet. There have been a number of stocks that have fallen in value for good reason. They actually fell before we started to see the inflationary data tick higher and the higher interest rates. You know, a name that comes to mind is Netflix. I think Netflix, I've been asked about Netflix quite often. I think a name like Netflix, unfortunately, had their problems before we had this higher interest rate environment. So not all names, just because they've fallen quite a bit and present a bargain to individual investors, should be bought. I think you really have to do your homework at this time. I think a lot of the bargains, the Microsofts, the Apples, I think Apple's only down 2% for the year right now. That's how much it's already come back. At one point, I would have said it was a big bargain. So really look for those bargains that still exist today. and understand why there's still a bargain. Perhaps it's for good reason and you may not want to own it, but look for those names that are still a bargain and that you feel will rise over the coming weeks and months. Lastly, oil. I think oil is so crucial to this market. I was speaking to some people before we came on air, and we were talking about how oil prices could have added, or the increase in oil could have added maybe as much as 50% to the inflation rate, that it's boosted it 50% higher. Perhaps oil prices, if they were at $75, $80 a barrel, we may not have seen inflation at 9% in the US or 8% here in Canada. Oil prices prior to Russia invading Ukraine were somewhere in the mid 80s. And if you look at oil today, we're about $88, $89 a barrel, in that range. I think maybe tick down today a little bit. So we might be around $87 a barrel. So all the premium that was built into the price of oil that came after Russia's invasion of Ukraine has come out of the market. But we've seen oil spike all the way to 120, 130, and now back down again. And it's probably no coincidence that you're seeing inflation data start to fall as the price of oil falls as well. So as investors, you want to obviously, as I said, look for good bargains, look at the stock market, understand what the Federal Reserve and Bank of Canada are saying, but you also want to look at the price of oil. If Iran are able to start to produce oil for the rest of the world, if sanctions are removed and they can now sell oil, that could be as much as 1 million barrels a day back online. That could help bring the price of oil down further. We know the US is producing oil between 12 million and 13 million barrels a day. They actually reported a higher inventory of oil, this last report that I saw in the last couple of weeks. So the rest of the world is trying to make up for the loss of oil that's come out of Russia. Hopefully, we can continue to do this. And as we move into the colder months, the hope is that Europe, United States, Canada, Western world, as we call it, will be able to make up for the loss of natural gas and oil that we're no longer getting or receiving from Russia. So keep an eye on oil prices. They are crucial to how this market behaves.